Okay, we're right now at February 2nd. It's London session update about 6 minutes into the closing of London session. Now, obviously, biggest event had just happened with non-farm payroll. Now, most numbers came out quite positive. The average earning came out at 0.3%, which beats the expectation of 0.2%. It's still not as high as the previous number. If you take a look at October 6, 2017, we did reach to 0.5%, and even the previous one 0.4%. So but it's definitely edged higher. Now, if you take a look at the annual data, it's actually came out as a positive surprise, perhaps the highest one since I think since 4 years, around at 2.6 or 2.9. Just give me 1 second. Let me take a quick look. So year on year, that's 2.9%. Expectation was 2.6. So that definitely, came out as a positive surprise. The free employment change also is very impressive, coming out at 200,000. Expectation was 180. Now, notable thing is the average. The average number is also 180 from 2017. So obviously, an unemployment rate is still at 4.1%, all-time low. Obviously, it's a very, very positive pictures. Few things to keep in mind. Of course, this definitely inject another round of buying into US dollar. If you take a look at DAX right now, it's at 89.34 as the moment I'm speaking. But remember the last video where we took a look at last time was at 88. So we definitely edge higher for now. But the thing you have to ask yourself is, will this sentiment continue? Right? Will we have a continuation of US dollar bullish strength? Now, personally, I don't know, but I doubt it, just because although everything looks good, but everything has already priced in also. So that means that unless we see an inflation data or average earning really shoots up to a point that the Federal Reserve has to come out, address the market, saying that, hey, we say we're gonna hike the interest rate 3 times. Now we think we might hike it more. We might have to do it 4 times or 5 times. If that's the case, then obviously you will see a shoot up into the US dollar. If you take a look at bond yield, of course, it continued to go higher and bond price continued to drop. All those correlation didn't really help the US dollar. So the market right now is still doubtful. You know, if all things are equal, this report should really cause US dollar to shoot up. But if you just take a quick look at, euro dollar, we're still above 24. 1.24, and even if you take a look at cable, you are still above 1.41. So when the US dollar versus the stronger currency like euro or British pound, it's still in the back seat, right? It didn't really completely reverse the picture. And that's why I keep saying that I personally think that unless the inflation data really come out of whack, are really in a higher positions. Otherwise, I don't think this sentiment of US dollar bullish strength is going to continue over the weekend. So, of course, you can make some pips if you're a day trader, but for a swing trader, I actually not interested and have not taken any new dollar long positions. On the contrary, I'm actually took a dollar short position just for a deep buying into cable. My current trade euro dollar is still in play. The only thing that had got stop out, well, not really stop out, a profit out, is dollar CAD, which is the longest trade that we have been holding since 2017 December. Today it got stop out when we moved the stop loss just a few pips above 1.24, and we just hit that previously, but right now we are back below 1.24 again. So that just show you that, US dollar, we do have a short-term momentum to the upside, but I really doubted that this sentiment is going to continue. Okay, so other than that, if you really want to buy dollar, obviously you want to buy against the weaker currency like Japanese yen, Swiss franc, or New Zealand and Aussie are both quite weak at the moment. Okay, so I come back with another weekly wrap-up analysis after the New York time. And if you have any question, feel free to ask me. Bye.